All right, let's bring in Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Jeffrey, just to start, what is your reaction here to what we just heard from Brian about what he saw in some of those minutes?
Well, it would coincide with what we heard from Jamie Dimon, that maybe this boom is in place for a while longer. I think 2023 is being called the year of the payback, and maybe Jamie's kind of pointing to that as well. Maybe we see tax hikes in the UK, budget rules come back into play in Europe, and hikes by the Federal Reserve here in the US. But between now and then, not a lot to get in the way of an economic boom.
Jeffrey, should the Fed start, you'd like to think they're thinking about this, but when do you think they should start pulling back on some of those asset purchases, even if they, agree that interest rates need to stay lower for longer, especially if inflation is going to be transient, as they say it will be? What about those asset purchases?
I think we've got to wait until I think a big part of this is making sure this vaccine-led recovery is firmly rooted. And that won't be clear until somewhere in the second half of this year. So it's possible that as we look out to the late summer time frame or early fall, that's something that could be considered at that point as we pass the 50% immunization thresholds around a lot of the world's major economies. But until then, there's still a lot of risk and risk of backtracking. We know that monetary policy works with a lag. And so it makes more sense to ensure that we're on solid footing before you begin to take your foot off the pedal.
I just want to mention here, we're seeing all three major indices now have flipped into the green, of course, right after some of those minutes were released. No change in policy expected anytime soon being shared. Jeffrey, I'm curious to know, because we keep having this debate around the pivot that the Fed is going to have to make. If the Fed is going to be backed into a corner almost because of the economy really recovering so strongly and so quickly, do you view the Fed right now as one of the bigger risks to the market?
Not in the short term. No, I don't think so. I think that bond yields have stabilized here. They're not putting additional pressure on the Fed to take any kind of action one way or another. We're seeing transitory inflation pressures largely due to supply chain bottlenecks and easy comparisons to a year ago. That may begin to ease as we get into the summer months and supply comes back in a more complete way than what we're seeing today. So no, I think the Fed, the ECB, other central banks are wise to be looking through some of this and saying, we're not really got our backs to the wall here at all in terms of taking any action anytime soon. That 2013 taper tantrum environment is crystal clear in the minds of so many policymakers. They don't want to react too soon, knowing how quickly markets can take those actions from tapering to tightening.
Jeffrey, what about plans to raise corporate taxes? President Biden was asked about this earlier in the week. He says he needs to do this in order to pay for his infrastructure plan. And when reporters asked him, will raising the corporate tax rate incentivize companies to leave the U.S.? Will it hurt the economy? He said absolutely not, that there's no evidence of this. But what are you hearing even among your clients that, if he goes ahead and raises these taxes, what will the real impact be on the stock market and the economy?
Well, we'll have to see. Obviously, when tax rates go up or down, there's obviously a lot of other factors involved. What I can tell you is that corporate tax rates have gone down steadily in every major country around the world for more than 20 years. There really haven't been any material increases. So this will be the first time in a very long time. So I think it's difficult.
I believe we just lost Jeffrey there. I don't know if anyone else still has him there at home.
Wait, he's back. Thought I heard
Sorry,
him.
Jeffrey, we're just having some technical difficulties here. We just lost you for a brief moment. I'm not sure if you're back with us now.
I'm sorry. Hopefully you can hear me. I was just talking about how corporate tax rates have come down really across many countries. This is the first time they've gone up in a very long time. So it's difficult to make the statement that we don't think it would be any kind of an issue. We know that it will probably take about 10% off of corporate profits were we to see those tax increases here in the US and a similar number in the UK, given the numbers that have been talked about by the Chancellor of the Exchequer. So there would certainly be a hit to profits, but that's in the context of a booming return of corporate profit growth. So all that has to be balanced out. I'm not sure you'd see a lot of corporate relocations as a result of it, as long as U.S. corporate taxes remained around that, say, 25, 26, 27% rate that most nations are aligned at.
What about the impact it's going to have on the stock market? Is this going to be a big hurdle for this rally continuing? And should investors be looking at strategizing their portfolios, knowing that taxes are going to be going up?
It's a possibility. I do think that because it's the first time we've seen this in a long time, markets may begin to extrapolate this to not just in the U.S., but around the world. And of course, for multinational corporations, they don't just pay tax in one country, they pay it many places. And if they were all rising, well, that would be a different story. And this would be the first time we see a turnaround moving from stimulus to, I don't know if it's austerity, but certainly tightness on the fiscal policy front. I think it's too much to just expect that this gets done without being watered down to some material degree. But certainly it is a risk to the markets as we look out to the latter part of this year. If it looks like there's little hindrance to raising corporate taxes, not just here, but in the UK, in Japan and elsewhere.
All right, Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Thanks so much for your insights today.